Welcome in, Glenn. Thank you for joining us.
Hi, Seema. How you doing?
Doing well. They're watching this economy very closely. All this talk about a recession, but you're not seeing it show up in travel. Record third quarter. You raised your fourth quarter outlook. However, one of your competitors, TripAdvisor, yesterday said they're starting to see the consumer pull back, shortening their stays, be more thoughtful around their travel budgets. What are you seeing right now?
Well, we did our earnings call last week, and we're looking at that data, and we're trying to see, is anybody beginning to pull back, or we're not seeing it. We're not seeing people who are going for, say, a lower star rating. We're not seeing in terms of people lowering the number of days they're going to be away. And we look closely at places like Europe, because that means people think maybe that'd be a place. But so far, so good, and hopefully it'll keep up. We'll see.
Okay, well, pricing remains a big topic of discussion. We're waiting for that inflation report tomorrow. But if I unpack the September CPI report, airfare inflation up 43% year over year. That was the highest on record. And get this, more than 5 times higher than the broader inflation rate. Is this sustainable, Glenn?
Well, sustainable is an interesting question or not. I was on a plane over the weekend, and it was packed. And we're looking at our numbers, and we're looking at people who are booking. We're looking at our forward bookings, and we're seeing people are still willing to pay these very high rates because they haven't traveled for 2.5 years. What will be interesting is much further ahead is, will people say, gee, it's just too expensive? Nobody knows that. I do know right now, though, people are booking.
More, Glenn, it's Morgan. What are you seeing looking into 2023 in terms of pricing across your platforms and brands?
Well, we look at our numbers very carefully. And one of the things I really like to look at is our forward bookings for Booking.com. And looking at that, looking out towards the first quarter of 2023. And I'm comparing that against 2019, same time. And I'm seeing that our gross bookings are up 25% compared to 2019 at this time. And that is really interesting, showing how much people are booking now. I will say it's a small part of the first quarter. People don't normally book this far ahead, but it's really a good indication. And of course, it is cancelable, so you don't know what's actually going to end up being revenue. But for right now, I'm feeling good about it.
And Glenn, the type of accommodation consumers are booking, any shift there? I ask because Marriott this morning announcing that it's launching an apartment-style accommodation as more travelers look for a bit more space. Are you seeing something similar at Booking?
Well, there's no doubt people like that alternative accommodation, the home, the villa, the place on the beach, and that's great. And that's why we have it. We added 300,000 properties in that area for Booking.com between the start of the year until the end of the third quarter. And we look at our numbers, well, are we getting more share into that area versus hotels? Turns out it's not that much bigger than it was 2019. It's about 30% of our business is going through that home area. But what's one of the reasons is people also like hotels. So both things are growing really nicely. Part of the thing in our view is show people all the different accommodations, let them choose what they want. And for us right now, we're able to provide whatever they want, and we like that.
Let's talk global for a second. Your footprint in China, Glenn, are you reevaluating that? I talked to the CEO of Royal Caribbean who said that they're exiting China as there is a lack of visibility right now as to when that travel story will rebound. Yet General Electric CEO Larry Culp telling me they're there. They're going to continue to invest in that country.
So there are a couple things to think about there. One, we all know there isn't a lot of outbound travel from China right now, which is really what our strong suit was before the pandemic. And that's not happening because of the COVID restrictions in China right now. We recognize, though, that in the long run, China is going to be a major part of the global travel economy. And if you want to have any part of the global economy, you really have to think, do I want to be in that biggest part? So, we have operations there. We're not doing a lot of business right now, but we think that's a great opportunity for the long run. So we're going to keep looking at it that way.